What is going on, party animals? Billy here from Storm Trades with another trade recap. Today we're going to go through my CL futures short trade that I actually took on Tuesday, July 14th, inside of the Unicorn University Discord with all the homies there during the AM New York trading session. Now, real quick, this trade was another example of me missing the reversal, but not worrying, because if we still have a solid draw on liquidity below us, okay, if we're looking for shorts, then we can in fact still get in on a continuation. Let's get right after it. Starting off on the daily, what you're looking at here is the last 4 daily candles. Okay, when I'm looking at the daily chart, I'm trying to get a daily bias. I want the narrative to jump off the page. I want it to be very clear that we are moving from some sort of external or internal liquidity and seeking. If we had external range liquidity, we were seeking internal, and vice versa. Now, I set up my daily trade the same way. I have to make it simple. I have to make it super repeatable, or if I don't, then I screw up. I don't know about you guys, but if I make things too complicated, then it typically doesn't go well for me. So every day when I get inside of the Discord, I'm setting up my, basically the Discord is my sort of trade desk, and I'm updating my charts before I start trading. And this is exactly how I do it. First things first, I will mark out the previous daily low, previous daily high. Now, as soon as we do that, we're already sort of getting some sort of a narrative, right? We just recently swept a previous daily high overnight and early in the morning. Now, with just this information alone, we don't really have a narrative, but it is already starting to tell us a story. What really matters is where price has been delivering from, and do we have anything to reach towards, okay? So we have the previous daily high and low. Now I want to run a fib from the previous daily candle. If we were going to be displacing lower today, okay, on the daily candle, I would want the wick to be forming in the upper quadrant of the previous daily candles range. All right, now I want to mark out any external range liquidity that we are currently just delivering from. And in fact, we just swept a swing high, right? We short from swing highs and from bearish daily fair value gaps, and we want to long from swing lows and from bullish daily fair value gaps. So this again is telling us a story. Now, when I add on the fact that we actually swept that swing high inside of a bearish daily fair value gap, right? There's not a lot of examples that I can show that are like so clear that everybody can get it. This is one of those, okay? This is very clear to me, right? We've swept external range liquidity, and we've entered and are delivering back out of a bearish daily fair value gap. Okay, that is external range liquidity. Now, what are we going to draw towards? Well, we typically go from internal to external. That's how price books. And we have a swing low down here. Do we have to reach that today to be successful? Absolutely not. It just has to make sense that we had some internal, and we could be heading lower, right? This was early in the week, so we could be heading lower the rest of the week, but we needed to make sense in terms of the overall narrative. So we have our internal liquidity here, and we have our external liquidity here. I am looking for lower prices, okay? This was a really good example of something that just jumps right out. If you're aware of how price books, internal to external, etc., then this is a very clear daily bias to the sell side. All right, now next thing up is I go immediately to the hourly chart, and I am looking for changes in the state of delivery, qualified by some displacement, which typically will leave a fair value gap. Once I see that, right, and I don't necessarily always need to see that, but I like to look for that so I can sort of find either a smart money reversal or the first reversal of the week. So let's move on to the hourly time frame, and let's look at what we have right here, right? So price has been going higher, and we had a little bit of breakdown here last Friday, consolidation, and a displacement up into this swing high, right? This daily swing high, and the external range liquidity. This is from over here. All right. I'm going to just mark up the chart a little bit and move these levels over so you can see. All right. Now, we had a move up above the swing high into the bearish daily fair value gap, and then a major league displacement down below. Okay, what we did here was we left. Let me just make note here that this would be the change in state of delivery, right? This change in state of delivery. This is the series of up close candles, right? That took the liquidity prior to the displacement down and through. This is typically, if it's a quality change in state of delivery, it will leave a fair value gap, which we have right here. Now, whenever we have a clear swing and a high and swing low, I'd like to draw a fib. Again, the fib doesn't really do that much for us other than help us line up potential exit points. If you've been watching me for a while now, you know that I love using the 1/3 ADR, okay? And if you take note here, we just swept the 1/3 ADR to the buy side. And we have 1/3 ADR down here, which I love to use as a draw on liquidity, currently located between the -1 to -1.5 standard deviation on the hourly chart. Now, that's typically the lowest hanging fruit draws on liquidity happen inside of there prior to some sort of consolidation or a retracement. So I like that. I don't love that. I feel like we've already missed major reversal here. So as we'll see on the M5 time frame that these hourly super bullish or bearish candles here are going to indicate to me already that we missed the reversal, but we do have room down to the 1/3 ADR and a lot of room down to the previous daily low, etc., and down to the -2 and -2.5, which is a good longer term draw on liquidity. So I am immediately ready to go to the M5 time frame, right? So I'm clear that I am on sides with some sort of a move down, and that makes complete sense given our internal to external move. So going down to the M5 time frame. On the M5, I always want to confirm some sort of a sweep on the M5 time frame, and then a displacement down through the series or single candle that took the liquidity. I just want to make note of right here. Let's go right here. We had our liquidity rate, okay, on the hourly, which is also our liquidity rate on the M5. For those of you who trade T-trade style, this is a C2 sweep, okay? Whenever we have a C2 sweep, we are looking for a C3 and C4 displacement or just continuation until we reach some sort of a key level. What kind of key level would that be? Well, if you notice, we have Asia and London relatively equal here, right? That's a really good draw on liquidity, and frankly, that's the draw on liquidity that I used, knowing that below that we had our 1/3 ADR, so I had some room to go. Even though this was a monster move, we still had a lot of room to go according to the ADR levels. So just marking up the, and also I want to make note that I would, if I can, right, if I have a clear swing high and swing low that took the liquidity, I can run a fib based on the M5 time frame as well. Right? Price is fractal. So because of that, because price is fractal, we can sort of line up here, and at the -4 to -4.5 is lined up with the relatively equal lows of Asia and London. So I'm immediately knowing that I already missed out on this this unicorn right here. Unicorn is a series of down closed candles prior to the move that took liquidity and then the displacement through. We had what made it a unicorn here was that we had a fair value gap that overlapped with the breaker block. Now, I know I already missed this. Okay, so a lot of people would say, all right, I just missed the move. For me, I'm trying to see if we've already reached a relevant target yet, and I don't believe we have with the relatively equal lows here between Asia and London. Anytime you have that, that's a huge draw on liquidity, and I've been using the 1/3 ADR as another draw on liquidity as a target. Doesn't need to hit it, but if it's got a lot of room there, then I feel like I have more room to go for a particular trade. Now, on the very next candle here, we confirmed a bearish M5 fair value gap. The way that I want to get involved with some sort of a continuation is I'd like to see some up close candles, okay, come up into this internal range liquidity, and then I'd like to see a close below that prior to reaching the external range liquidity, which I will have here as the relative equal lows. Okay, so let me move price forward here, and we had our move up into the internal range liquidity. We have that. I will mark this out as a order block, and I will be looking for, and I was looking for, a way to get, a way to get on sides with a trade to take it down here. So let's move price forward here. Okay, on the very next candle, we had a close below this order block, right? I put this was my trade right here, and everything was documented inside the Unicorn University Discord. Okay, I set it limit here on the order block with a I don't look for 2R if my low hanging fruit is right here at the relative big lows. However, I do want to make a note, right, that had I held all the way down to the 1/3 ADR, it would have been a 4.4 mark trade. Now I get tagged in on the very next candle, and very quickly we hit our target. Now I'm just going to move price forward here, and you'll see that 1/3 ADR is an amazing draw on liquidity, and I'm just going to keep utilizing that more and more, and perhaps keep some runners on so I can catch larger moves. All right. Thank you guys for watching. I really appreciate it. And you guys get anything out of this at all, really appreciate a like, a subscribe, comment. Let me know what you like and what you don't. You guys have a great day. All right.